Hey, everybody, welcome to our Sunday, as I call them, Notes Live show. It's our kickoff show as we are getting the open here on Sunday evening, 6 p.m. Eastern, taking a look at what kind of mood the markets are starting off in. So, as always, thank you for joining us. And I see all the questions coming in. Yeah, at some point, I need to get some intro music or something going here, but I love jumping right into the show. All right, so I think we are good to go. Great to see everybody. Members, you will notice that you have a link that was alerted to you, actually two links. One was the link to the notes. The other was the link to this show. So those notes are covering, the main markets that I have my eye on. Look, when we want to, and this is a really great place to start the conversation. When we want to have a focused set of notes that we might do for ourselves, right? You're looking at what a rough look at what I do for myself on a Sunday. It anchors me, right? Winning for the week begins on Sunday. It's not Monday morning. And so what I like to do is look at what matters now. Now, do I look at the entire market? I look at the entire market through a view like this. It's a relative outperformance, right? It actually does not do us that much good to break down, say, 24 markets on a regular basis and just say, hey, these are the 24 that I'm always going to look at. What we want to do is keep an eye on all the relative performance, strength in commodities or currencies or particular sectors, indices, and the individual stocks within them. But we really want to focus on what has setups now or what's influencing the market now. And that's what you'll see in the notes. I'm still very much a fan of focusing on the short side of tech. So let's sort of tackle the first thing that I just sort of bring up in the notes. And that is, the big question is, I'm reading right from the notes here. The big question is, are the indices bullish now? Because that's what everyone's talking about. You head on over on FinTwit, you head on over on, media. The conversation is, oh, the markets are bullish now because of the rally. We saw that last week. 1, 2, 3, 4 sessions higher, right? So the question is that a rally? Is that enough? Well, yes, it is a rally, but is it enough to break the downtrend and turn into an uptrend? And I phrased that very purposefully. Are those 4 days enough to break the downtrend and establish an uptrend? Well, the first question, is it enough to break the downtrend? Yes, I think that in some cases, some more obvious than others, we have a break of the downtrend. So I would look at this area here and say, yeah, there's a pretty good, it's a lot of bullishness there. Pretty good look at a broken downtrend. But if for those of you that are fans of Charles Dow or Wyckoff, or for those of you that have either the JT multi-trend, the trade flags, or the trade flags, or well, let me show you on TOS what this would look like. You have this view where you've got the two trade flags up there, or maybe you've got the two rows, right? Whichever one you have, you'll notice that we have a neutral market. 4 market trends in any market. Yes, of course, up and down trends, but we also have distribution and accumulation. And this is where, and hear me out, gang, because this is where the wheels fall off the wagon for most traders. They look at the markets in a very binary up or down trend way. Meaning, if it's not a downtrend anymore, then clearly it must be an uptrend. And that's actually incorrect because there's actually 4 different market behaviors. And the one that we're in right now would be considered something akin to chop, something akin to distribution, where yes, we can call this a neutral market. We can say that the previous downtrend was broken, whether that be the NASDAQ or the Tech XLK. We cannot say in those same 4, maybe 5 sessions, we've organized into an uptrend. So that brings in the next important question, and that is this then maybe bullish territory? Those are two different ways of describing the market. An uptrend and bullish territory are not the same thing. And I think this is such an important question. I have no water. Okay, I have a little bit of Topo Chico here. So, being in the bullish environment, being in bullish territory, as opposed to being in an uptrend, are two different things. The easiest way to say, "Hey, are we in bullish territory?" is something that I call the equator. I'm sure those of you that have attended Charts and Coffee know this terminology. If we are north of the 200 propulsion, which is the 200 exponential moving average, crossing with the 8 exponential moving average, we could consider that bullish territory. So there's a pretty good argument that XLK has just creeped up into, knocked on the door, just barely at, just into that bullish hemisphere, bullish territory. Now contrast that with the XLY, not in bullish territory. Same four, look at this, up day, up day, up day, up day. Same four rally days, right? 4 good strong days, but could not traverse that 200 propulsion, right? So that's when we talk about bullish territory and uptrends. Are there uptrends here? Oh gosh, no. Just broken downtrends. And please know this, gang, they are not the same thing. So that was something I definitely wanted to talk about as we kick off our evening. And I'm trying to move my footrest. There we go. Okay, so let's dive into the questions, because that is what these shows are all about. So let's go ahead and dive into it. I do want to remind everybody, we've got a promotion right now. If you want to join me in the Sector Secrets Mastery, the promotion ends the 25th. I mean, technically, I guess it ends the 28th, but that's a Monday, and I wouldn't want you signing up so late that you couldn't join us for our very first bonus session that is that Monday afternoon. So our promotion for the mastery and the bonuses ends this Friday. So check out the webinar first, gang. Make sure this is a process, a methodology that resonates with you, and then check out what we've got going on. All right, so let's go ahead and dive into the questions. First question, first up. In my mastery program, are the breakout sessions during trading hours? Yes, of course. If we want to talk about the markets while they're open, and then if so, why live trading? So, I think the word live trading, if we're going to take it really literally, yeah, there might be some executions, right? Some entries that we end up getting while we're in the 9:30 to 4 window, but really it's more live market analysis. And yes, there might be some live trading, because sometimes if we do not have, so Mark, if we do not have any interesting daily time frame entries that are near proximity, there's nothing we can do with them that day, I'll day trade in the mastery. So while day trading is not the bulk of what we do, that is something that I teach in the mastery. So why live trading? If there's nothing near levels that we want to do something with on the daily, I'll just cinch that down into a 2 and 5 minute time frame, and we sometimes might do some day trading. All right, next up. Well, PSW, I think you got your answer. We go live at 6 p.m. Right here at the Simpler Trading YouTube channel each and every Sunday evening for 30 minutes. All right, Michael asks, can you explain why we look at the VIX? Yeah, of course, of course. Now let's jump into that VIX. All right, so if I take a look at what's going on here with the VIX, sure. In fact, this was one of the charts that's in the weekly notes, this week's sector and macroeconomic notes. So why the VIX? I'm not a big fan of market internals. You will not hear me refer to the VIX a lot throughout the week. You will not hear me refer to really any other market internals at all, because I look at market internals actually literally. What does that mean? I look at market internals from the standpoint of flow and currencies, which are the biggest market on the planet, and the way in which the individual stocks within the sectors and the sectors within the indices are moving, because those are quite literally the internals, the guts of the market. So the guts of the market are individual stocks. If you're looking at the indices, the guts of the market are the individual stocks within the sectors or sector ETFs. So I like looking at things a lot more literally in terms of what those internals are doing. But the VIX is interesting because it's just really a barometer. That's all that it is. And it's a really easy thing to see, well, where are we? We're going to see kind of more normal volatility. It's a really good gauge for volatility, not for direction necessarily always, but it is telling us that right now we're sinking into price action. And right now we're between the point of control and the 200 propulsion. It's telling us that we're sinking into an area where we're likely not to see as crazy a volatility environment. And of course, geopolitics could come out of nowhere. FOMC sound bites can come out of nowhere. But generally speaking, we're sort of sinking into a more normal zone within the VIX. And that's why I like to look at it. And that's really the only internal I pay any attention to. Next up, quick question relating to playing the clearing range. With these markets, is there an increased urgency leading to very efficient price movement? Does it make sense to move a clearing range to 15? No, because a clearing really does take us to 10. And I don't know about urgency and efficiency. Urgency actually, for me, Karthik, urgency actually is the opposite of efficiency. Urgency sort of is a little bit of a panic or concerned market, which is really the opposite of efficiency to me. So my answer would be no on assuming that urgency somehow makes the markets more efficient. I think it makes the markets more concerned. And then the other part of it is, should we move the clearing range to 15? No, the clearing isn't something that we just redefine to take it from 5 to 15 or 20 or 30. It is that first 30 minutes of the day, starting at 9:30, ending at the top of the hour. All right, next up is, let's see, our next question. Hey there, Glenn. HYG for short. HYG for short. And let's take a look at the daily time frame for that. So yes, I do think that there is a very interesting potential short here as we trade into that resistance right there. Gosh, we not only have that resistance, we also have, take a look at that volume ledge in there. So we have this volume ledge in here, which I like very much. So what would that tell me, that resistance right there? That resistance would tell me that what we have at the moment is not just price-based pressure on this market. And let me just make sure I got this link in so everyone can see this link for the replay. So what I want to make sure that I remember when we're looking at this particular chart is that what we have here is not just a downtrend, but let me show you why we have a downtrend. Where are my drawing tools? There we go. So we have not just a downtrend here, but I can confirm it two ways. Take a look at this. Downtrend. Look at all the red grab candles, downtrend. We've rallied up into the resistance of not just volume, but right, these three moving averages. There's the wave. And so, yes, I do like that setup. The closer we can get, however, let me show you something. The closer we can get to, let me grab my drawing tools here. What do I do with my drawing tools? The closer we can get to that area, right here, volume ledge, right in here, into the wave. The closer we can get in there, I like the short. So where we are right now, this area, this edge right there, that is the lower edge of our entire zone. So yes, I do like it. I do like that, that for a short, Glenn. It's confirmed bearish momentum, bearish trend. That's what I call double red, trade up into the wave, volume ledge, resistance hanging out there. I do like that very much. Yep, we're definitely going to keep an eye on that. All right, next up is, let's see, XLP. Am I going to stay in XLP? So remember, when it comes to any trade, and this is a mastery trade, uh, when it comes to any trade, Michael, this is what's so great about what we do in the mastery. Everyone has different position size. I don't tell you how many contracts to buy. I show you how to do the math. I don't have you waiting. I don't have you all waiting for when I'm going to alert you all to the stop loss. So everyone's waiting on pins and needles without the information. I show you how to calculate, right, the stop loss. So you're never waiting on me to tell you, hey, we're out, because you know what that percentage-based risk is, right? And that is what I have to really emphasize for everybody. You know, from each trigger, the aggro, the moderate, the conservative, you know what your risk is from each one of those triggers. I have to say, it's imperative that you follow that. Otherwise, what's going to happen is the math and the risk affecting your account could lead to less than desirable results by way of losses that are too large, and by way of, well, risk of ruin, which is, as I like to tell traders, blowing up an account is not a rite of passage. It's actually just a misunderstanding, or even just not even being taught what position sizing and risk management actually is. And I count myself very lucky, knock on wood, that one of my mentors early on hammered that in early in my career. So, I never have blown up an account, not because I never lose. Of course I lose, right? I mean, some of you in the mastery know. I tell you all, when I lose, we spend a lot of time talking about losses because that's where we learn. But one of the things that we want to remember is it's okay to take small losses. It's part of the game. It's when we over leverage, we take position sizes that are too large, that we risk our account blowing up. And a blown up account is down 50%, gang. It's not zero, it's down 50%. So I bring all that up because XLP is one of those names where I think some members, they're out, and other members, based on the risk, are still in, okay? All right, next up is SPX and NDX closed with a fierce rally. Everything did. Yeah, all the S&P variations, right, Manu? ES futures, SPY, SPX, NQ futures, QQQ, NDX. Right. I mean, everything ended quite strongly on Friday. It was a pretty remarkable rally, no doubt, no doubt. I initiated some shorts into the close on Friday. Oh, okay. So first of all, Manu, one of the things that I talk about with our traders is a simple little tradingism, and it's this. And this has been around for decades. I remember hearing this as a very young trader. Don't fade Fridays. I don't like to fade any close, but definitely don't fade Fridays, because it's not unusual that people go home, they see that strong Friday close, and they FOMO Monday morning. And what direction is that fear of missing out going to head in? It's usually going to be higher. So don't fade Fridays. Now, as we go into Monday morning, yes, we could start looking at those particular markets that are still either nearing overbought or just corrected their downtrends. So I think that correcting downtrends would be something like the XLC, a borderline XLY, ITB, XHB. These are corners of the market that I've got my eye on. So are the mega cap tech back in the bullish zone? So again, Manu, you saw me walk through that process, right, early on in the show. And so Amazon, no. So what is that line in the sand for us? What's that equator, as I like to call it? It's this thing right there, that 200 propulsion. Got some volume in here. Still have the 200 resistance. So this is just barely still in the bearish hemisphere. To me, above or below that 200. And by the way, look at how many times, once before, we tested that level. So I don't want to jump out ahead of that. Actually, technically, we can say twice we test that level. How many times before we tested that? And by the way, before it became resistance, look how effectively it was support for a period of time. So yes, these resistance levels are really important. So this is still in the bearish hemisphere. A rally could and can often break a downtrend. This wasn't really in a great downtrend, but is the market in bullish territory versus is the market in an uptrend? Two different questions. And for Amazon, the answer via my tools is no, not for me. All right. XLY. Hey there, I'm Groot. Traded XLY Thursday. Is it a 1, 2, 3 reversal for a short? No, my friend. I would not call it a 1, 2, 3 reversal. I mean, it's very borderline because what we have here, and good eye, you have your 1, you have your 2, you have your 3, right? Kind of flopped around, and then we broke out. And on that same day, we went yellow. So, I mean, it's very tricky to call that a 1, 2, 3 reversal because we've had so little time in that neutral underlying market trend. So the question here is, do I want to consider this a market that could be bullish? I've got a over 100 CCI, and I have taken out the Darvis resistance right there. I would be careful. But the thing that we do have that is quite bearish is the resistance at the 200 propulsion. So this 1, 2, 3 is still happening below that 200. It's still happening in that, as we like to call it, that bearish hemisphere. So when people call bearish territory, what is their measurement, right? We hear all these things. We hear all this analysis on TV, such and such is in a bearish hemisphere, or such and such is in a bearish territory or bullish territory. Where is that line, right? Where is that line that says, here's the bearish territory, here is the bullish territory? And they don't talk a lot about that. I'm going to tell you that what I'm looking at for bearish territory is where is price in relation to the 200. Cat, stop that, little dude. All right, so quit tearing up the bag. I know. All right, so that's the way I would look at that. I am Groot. Yeah, that's the way I would look at that. All right, is there an ETF or stock that I like to play wheat? Yeah, it's WEAT, which actually right now we are long. We are long WEAT at the moment. It's not one that I like as much as corn. Corn is far better, right? Corn is far better because corn, CORN, and soybeans, SOYB, are not Ukraine narratives. They were already heading higher before the inflation narrative creeped in. And they were already in far better structured uptrends. That's really important as well. So the thing to remember about wheat is it's going to be volatile with what's going on abroad. And this uptrend was not an uptrend with the inflation narrative, which is really tricky when it comes to wheat. So if you are going to look at wheat, cool, but please do not neglect the two better ways to buy grains, actually better uptrends, better higher quality uptrends. That's corn and soybeans. And this, of course, is WEAT. Okay. All three are buyable. It's just that wheat can be a lot more volatile. All right. Okay. Next up is Nick asks, I am a novice at trading stocks and a complete beginner to trading options. Yeah, we were all there once upon a time, Nick. I can promise you that. Is there a course or program that I can recommend to take you from options newbie to an effective options trader? Nick, I mean, the best thing, I can only recommend, I think of, for the kind of analysis I'm talking about, the thing that's coming to mind, and it's actually the lowest cost way to do it, would be joining the Mastery promo that we have right now. You can join me for the month for $197. You get a month of access to the chat room, access to my trading alerts. You get minimum, I believe, 8 or 10 sessions with me. Don't hold me to it. There's a sales page for all that stuff. Actually, if you get a timeless replay, there's some information and a link on that page. But what's good is we have a learning center. So I teach people how I like to play options. So Nick, I have a very basic approach to options trading. I trade in a cash account and I focus on long calls and in long puts. I'm not a big fan of spreads. We focus on low cost options, so it is very small account friendly, but it's really more so it's scalable. So a small account could engage in the trades that we're taking, but a larger account is just going to take more contracts and make that well suited and a needle mover in their larger account, which is what I do. So that's the one that's coming to mind right now. The ETF masterclass is a good one, but I don't know that I get into a lot of uh, basics on options trading in that. And then, of course, if you join any of our services, you have access to our foundations, which has a lot of basics there as well. But I'm just buying calls and buying puts, and that's about as basic a trading approaches as you can have, where we're waiting for a specific price to be reached, and then we're going to buy a very specific option, strike, symbol, expiration date. And so, I think if you eventually want to graduate to spreads and so forth, you still need to focus on being a very, very good long call, long put purchaser, even before you want to get into selling premium. So that's what I can tell you. Check out the link here and then see if that's something that, in the trade examples that I give you in the webinar, say, hey, that is something I think I can wrap my head around. That does seem like something that I can do. It does seem pretty comfortable for, where I am from a skill set perspective. It's very new trader friendly because I'm not a complex options trader. And it's very small account friendly because I focus on a scalable approach. All right. When is the first live session for the Sector Secrets new members? Charles, I log into the room almost every day. I'm on the mic Wednesdays at 9:20 and Fridays at 3 p.m. So this Wednesday will be the first official live session, but Lorna and I are logged into that room with everybody else, kind of communicating in the general chat. I log in, right after Charts and Coffee is over every morning. All right. Next up, should we sell the fade on NQ? What I would tell you is this. First of all, I like the XLC and probably certain stocks within the XLY a little better than the NASDAQ broadly. In other words, I'm looking at a couple boats, not necessarily tides. But am I bearish in the NAS? I am. What I'd like to see is whether or not between 9:30 and 10, and maybe to the initial balance at 10:30, can we see if there is any FOMO buying? Because look, all I've heard is that everyone's saying the longs are back, the longs are back. And think about your typical retail trader. They're not doing homework. They're not like you all educating yourselves. You all are a rarity. It's sad to me, but kudos to you all. You're probably a small minority, 5 to 10% of traders who are actually educating themselves. The rest are watching television. That's good luck to them. And what's happening in media, both on the TV and on the internet, is the bull is back. That's all I've heard. No one's talking about the fact that we're still below some key technical levels. No one's talking about that, a lot of that rally last week to close out the week happened at some spotty volume. So those are things that I would say are pretty tricky and unfortunate that financial media just emphasizes one very specific narrative. And look, most of financial media, most television stations do better in an uptrending market. They're biased to the long side. So I think there's a little too much being made of the long side of the market, but I don't want to step out in front of the freight train. So what I'm trying to do right now, and the short side of the market, meaning short tech, is not something that I think is broken, because take a look at the bond market. What I've been telling my members is Something's out of sync here. Either bond yields heading higher are the true story, or the NASDAQ heading higher, tech is the true story. XLK most specifically. Remember, XLK is unique. Number 2 weighted sector within the Dow, number 1 in the S&P, number 1 in the NASDAQ. One of these is wrong. My bet is equities moving higher the way they did is probably just breaking the previous downtrend and going into chop. Now, here's the cool thing. Please remember, you don't have to get a read on the NAS, Dow, S&P, or Russell to be a trader right now, because we have a pretty darn full book in the mastery, and we're long things like Freeport McMoran. There, once you understand boats and tide, and if you want to kind of look at them as all sitting in the ocean, once you understand that relationship, you know that you can navigate around the indices if you don't like the narrative, or you can find particular stocks weighted within those indices that are clearly heading lower, as opposed to things that might be testing the equator, might have gone neutral as of last week. So it's just a matter of what you trade is more important than how you trade it. So if we can find and focus on the what, watch list building, you're going to find your results as a trader are far better than, oh my gosh, I was missing that secret squiggle, or oh my gosh, it was that super secret strategy that I didn't know to deploy. That's never been the needle mover. I will tell you right now, the needle mover in your trading is the most unsexy thing ever. Building a better watch list. Start off, if you want, by building 2, if not 3 watch lists. A bullish watch list, down uptrends, a bearish watch list, downtrends, and a choppy market. If you start to separate those, and then you start to see the synergies between, oh, okay, the uptrends are really very much sort of commodities related, inflation related. Oh, the downtrends are very much focused in tech and bonds, which are kind of feeding on each other in some ways. And the chop is in everything in the middle. I'd say healthcare right now. There's a number of markets that are choppy, but if you separate that, that's where you're going to find what you trade is more important than how you trade it. So just like that, gang, gosh, that 30 minutes flies by. Thank you as always for being here for the show. I know I missed a lot of questions, but you all know we've got a show every day, Monday through Friday, Charts and Coffee, starting at 9 a.m. So I'll see you all there for that. So thanks for making this Sunday Night Notes live show such a big hit. I love all the questions. Y'all are great. And I'll see you all tomorrow. Same time, same station for Charts and Coffee. Be good to each other, gang.